Holy F. This is really bad. Stocks have deleted over $5 trillion in the last 3 weeks. Ouch. So what's going to happen next? Because things don't look all that good. When we look here to the chart, this is a head and shoulders. What do head and shoulders lead to? Knees and toes, which means a dramatic move lower. But wait, is this a trap? Well, if we look here to this pattern, it actually means that if we're tracking this head and shoulders and we're perfectly tracking, we should actually get a bounce here, a pretty nice bounce. It actually implies back up to roughly 580 or a 20-point move. So is it a trick or a treat this week? Because $5 trillion, Scott Bessent says, hey, this is actually healthy. I'm not a multi-millionaire, billionaire like Scott Bessent. I'm sorry, this is not feeling all that great. So what he tells us is that it shouldn't depend on buying cheap goods from China, right? The American dream. And then we got Jerome Powell this week. So that's what it's really going to come down to. It's to both of those guys. So we're going to have Jensen Huang giving us keynote address on Tuesday. And then we got Jerome Powell on Wednesday. So we got a lot to go through this week. Let's jump straight in. But at a very high level, I want you to think about whether or not this is totally fine. So when your account goes down, are you like, yes, this is totally fine? Or are you like, you know what? I should actually make a plan. This is not fine. Well, if you need a plan, here's mine. Pause the video or watch all the way until the end, and I'll be happy to explain it for you. I'm also going to give you 2 hot tips at the end of the video, and you're probably going to like them. So just make sure you watch all the way until the end. All right, here we go. So is this really bad? Yes. Well, look, like we took that elevator straight down. So stocks deleted $5 trillion. Ouch. And here is a simple recipe because the pattern I talked about at the outset, it's right here. So a head and shoulders is bearish. We are currently at number 4 in the bear recipe, which means weekly lower lows and closing below the low. The same thing we did over here. Okay. And what's the plan? I expect a bounce if we are bullish, but we will listen to the algo. We'll just skip that part because I'll talk about that at the end. Our algo says we have a good alert right now. Where? On the S&P and on the NASDAQ. We will get at least to ingredient number 2 if we get over 570 on Friday at 4 o'clock. What does that mean? We have to form a weekly higher high and close above it here. If we go to the chart, this basically means that if we zoom into this part right here, look, we hit the blue line and we bounce. We actually closed green on the week. Over here, we bounced on the blue line, but we didn't quite close green on the week. We had a monster bounce on Friday, but it also shows us that we should go higher here. So from the test on the blue line, we go to roughly the previous neck. Okay, where's that here? Well, that'd be up to roughly 585, a number I just pointed to. One more piece of evidence here. If we look to the Russell, what's happening here? There's a failed breakdown. That's right. A failed breakdown can be a bottoming pattern. But for us to have an expansion signal, we have to do exactly what I'm showing here. Be above 570 on Friday, which is an easy way of saying that this pattern here, oh, wait, here we go. This pattern right here could lead to what? It could lead to a potential bull recipe, right? Printing a higher high and closing above. Otherwise, right now, the bears are in full control. They got now all the way to number 4. All right, pretty easy so far. Here's what Ryan Dietrich tells us too. 2025 now has a correction. So we could birth a bull starting on Friday. Could already have started. And over the last 23 times, 13 times finished with the year higher. So flip a coin. Are we halfway through? So are we in the middle inning? Well, if we're in the middle inning, it means that maybe we go down more and then higher into the end of the year. Well, this is where I think we have to ask ourselves whether we're going into a recession, because right now, U.S. consumers are like feeling the squeeze, right? Starting to crack as tariffs add to inflation and recession concerns. That's right. So what's happening? Is it really these 2 countries? Because here is the net effect of what's going to happen, right? There's this many imports that come in from Canada. To make it simple, because that's what the audience cares about, you guys are going to save $270 per household or raise about $36 billion. That's a drop in the bucket. And what happened? We deleted $5 trillion. So delete $5 trillion to make $36 billion. Yeah, that makes total sense. You guys want to save $270 a year to fire your best friend and to show the rest of the world that, yeah, this is totally healthy. It's fine, right? This is totally fine. This is healthy. I'm not so sure. Lots of people like this other country, as we've talked about before. It's not my favorite one, but that doesn't matter. What matters is this. Is it going to be the black leather jacket? Is it going to happen? It's going to happen in 44 hours. So this might be a great time to consider subscribing to the channel and maybe smashing that thumbs up because I will update you on all of this. Read this headline right here. AI startup to challenge NVIDIA. Oh my God, on a new model and framework. When are they going to announce this? That probably seems important. And Jerome's like, oh my God, what's happening here, right? I thought I had the plane landed. I thought we were done. No, pew, 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 right? Meltdown. In only 16 trading sessions, the market went into a correction. David Cawson here, right, from Goldman Sachs. What's he saying? We got some hurdles in the near term. Cool. And what else? U.S. exceptionalism? Fired. Tariffs end the age of U.S. stocks exceptionalism. So there's a couple of stocks left. Does it really matter? Not really. Micron, Nike, FedEx, sure. Are we really going to move the needle with those? Nope. Why? Because Trump trumps everything. U.S. stocks do face an uneven recovery from tariff trigger correction, though. All right. So if we know we got Jensen on Tuesday morning, and then we got Jerome Powell on Wednesday afternoon, that gets us to the middle of the week. Wait, at the beginning of the show, didn't you say that we're either going to be bullish or bearish? Yes. So by the midpoint of the week, I think we're going to have excellent feedback. There's the 2 o'clock rate decision, including an SCP. Those are dots. Just don't overcomplicate it. And then Jerome Powell's going to say, what? I don't know, right? It's going to probably depend on what the other guy says. So he's like, look, I got the data. I got to assess the data. What is the totality of the data? The net effect of the Trump administration's policies on trade, immigration, fiscal policy, and regulation will determine the current rate of interest rates. So what does the big Don say? President Trump. And this is what the response was from the ministry over in China. If war is what the U.S. wants, be it a tariff war, a trade war, or any type of war, we're ready to fight till the end. Cool. And as a response, Americans are feeling the pinch. Long-term inflation expectations are hit a 32-year high. Ouch. So again, what is Powell going to say on Wednesday? Well, here in his last speech, he told us that he is awaiting a greater clarity on the Trump policy before making a next move. But the market went into detox first, though. Look, pew, 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 and that got even worse. So I think it's really important what happens this week, but notably into April 2nd with all those tariffs. Why? Market enters correction territory, right? Look at that fast plunge. Chart watchers say the S&P needs a recapture of the 200 DMA. We're going to talk about that at the very end. So again, just make sure you watch. Bank of America says this is a technical correction. Cool. A bear market would be another 10% from here. It's plunged 10%, record high. There you go. When Trump does it, he does it big. He does it beautiful. He does it bigly. And the Dow Jones theory says now we got a potential bearish trend change. Cool. And high yield risks gauge sink to the lowest since August. All right. So what's going to happen, right? Every day we get new tariffs, 50%, 25, 100, a million, right? Who knows? But the market is getting a little bit fearful, but maybe a little bit exhausted. Why? We were at 18 a week ago. We were at 14 a day ago. We're at 21 now. And remember, the market closed right on the week, down by 2.2%. So why is it less fearful than a week ago if we're lower? Is the market just getting tired of it? Is there Trump fatigue? I'm a little bit fatigued. I'm not going to lie. And we're already here into an extreme reading, right? How much lower could it go? Hey, we could definitely limbo further. And I think it's going to matter what this guy does because Chinese stock investors embrace a Xi put as Trump roils the U.S. All right. Well, have a look at these dates right here because they really matter. March 17th, 18th, 18th, and then 20th. And then potentially a meeting in April. U.S. president expressed hope for China's leader to meet in Mar-a-Lago, but China seeks a more formal setting in Beijing or Washington. That could happen as soon as when? April. Hey, buddy, it might be high. And he's like, I know. I got my I got my eye on the prize, which is what? Winnie the Pooh, he wants some honey. And this explains the rise of Xi Jinping. I don't know if I'm fully convinced on it yet, but here's what I do know. China wants to launch a sovereign wealth fund, and it's going to be worth $1 trillion. That's right. The dragon's protecting the cash. And Trump, he wants to do $900 billion. I'm sorry. That's not the best one. It's not the biggest one. And then China stocks are half price. So what to expect from China on Monday? Well, I just kind of told you. So you can say, well, America number one, America always going to be number one. Or you could be receptive to fact-based evidence. That's what I'm trying to do. All right. So the startup said that they could challenge NVIDIA. There could be a headline. There could be another DeepSeek. And look, they're literally telling you right here. They're like, look, Chinese drug maker, Akexco, whatever, hail this biotech's DeepSeek moment amid U.S. rivalry. Man, and U.S. consumers, yeah, they're like, he's telling me this feels good, but like the economy is contracting. And they're ready for what? Any type of war, ready to fight till the end. Well, that means they better protect their American companies. That's these ones here: OpenAI, Anthropic, XAI, Perplexity. Yes, this Project Stargate's going to be really, really important. And look at what Sam Altman's calling for, right? Open letter. This is what Trump is saying here, right? Calling for the DeepSeek to get banned. Why? It's free, and he doesn't like that, right? It's open source versus the app. Again, pause if you want to understand a bit more. But he's basically said this. Where's the other quote right here? He wants them to be able to use copyrighted material, but there's a doozy of a headline. Where is it? DeepSeek shows that our lead is not wide and it is narrowing. Oh my God, they're coming in hot. Yes. And now we got a new leader. Is he better than the last guy? Hey, I don't know. But he's saying there's progress in the trade talks. Excellent. The G7 are coming to a consensus. Hey, that's progress. Uh-oh. These guys are making progress really fast. January, February. Look, the dates are right around what? What date was January 20th? Wait, what happened on January 20th? And then there's more stuff then. Yes, there's been more stuff since then. This country is not wasting any time. They want energy. They want AI. They want all of it. And they're willing to spend, at least on this, on fusion investments. Looking at GTC AI conferences for 2025. How can I assist? Please make the stonks go back up, please. That's all we need. Because right now, the bear is hard to outrun. This is from Double Line. I trust their research. It's pretty good. But again, let's not forget one thing. Warren Buffett is wise beyond me, much wiser than I think anyone watching. So what does he say? Never bet against America. I'm not betting against America. I'm saying that I'm unsure about the future. So is this all art of the deal? Is this all going to come to a nice, beautiful end? Well, that means we're going to fix the chart. And I already told you that this could be the start of it. That would be a bounce. A bounce can only lead to a reversal if the bounce gets us to 2, the reversal gets us to 4. That doesn't happen any earlier than when? Oh, wait. That would be not this Friday, but next Friday. Isn't that the end of the month? Yes. 2 weeks from now is the end of the month. That goes into April. So don't be April fooled. Make sure you're receptive that for the next 2 weeks, we got to go up. And then we got to go up more to what? Again, just watch the video. Print a higher high and close over that. For this week, that would be at 569.54. And that article at the top said that we have to recapture the 200 DMA. That's right here at 572.55. So above 573, below 573, bad. Because below 583, we're already below our monthly low. Pretty simple, huh? Yes. And I'll update you on anything that is relevant. Even simpler, here's the notes for this week. There's our 200 DMA, your weekly higher high, and your 50 weekly, your weekly higher low, and your support in between. We also have it into a football. We'll update you on that this week. Otherwise, here is the update. Your technicals, right now we're at 4 out of 4 bear for March 16th, and we're at 21 out of 100 for fear and greed. Here's a key dates that could drive the chart. So as I talked about, going into the first half of the week, do we get hype and then more hype? Do we get hype and then a fizzle? Is our final boss, Jerome Powell, going to save us? Or does he say, you know what? It's okay if stonks go down. All right, what about those 2 hot tips? Well, this is where I think we can actually have a pretty nice snapback. Again, a bounce. We can capitalize on it. So the 2 tips are SPY and QQQ. And these are nice setups because they popped off on Friday and they're due for continuation, which means another alert on Monday. These ideas would be good for roughly 3 weeks, and they offer a roughly 2-to-1 risk reward. So the idea here would be that if the S&P is going to rally, let's look at the target. So the target says here 593. Our system, again, not Justin, the robot says that, you know what? I think we can go back up to 593 for right. Okay, 593. Where's that? That would take the 50 DMA here, roughly. Okay. And what about the stop? 547. Okay. So we have to risk it all the way down to the low. Yes, because otherwise we're just putting a really tight stop. Okay. So marginally lower low or all the way back up to the 50. Yes. But here's the good part. We can get a trim halfway through. We get a trim. It goes back down. We give back our profit. +1, -1. You guessed it. That's equal to 0. It's a scratch. But here's the beauty of it. If we're going to actually go up, we're going to have to make it to this target first, trim, go to the 50, go higher, and then we're going to what? Potentially fix the weekly chart, which I just talked about. And our system is actually on radar for that. So when we look here, beep boop, our robot is scanning, right? We got S&P and QQQ due for a weekly alert or a swing alert, which basically means that would give us a 3-month window of opportunity. Yeah, that sounds like pretty good, huh? Yes. So we got to stop going down on the daily before we start going up on the weekly. Otherwise, there might be more downside ahead. That's what this big M says right here, right? M means more downside. All right, let's make it even simpler for you. Well, here's the summary of those notes again one more time. Or maybe you want to consider coming to join me at thealgo.com to come trade with me, because for the next 45 days or a month and a half, if the system starts to work, you can literally shadow me for free. I will help you. And at the end of the 45 free days, just make sure you cancel if you don't want to stick around. You can get access to all of my accounts, private education. You can actually even get access to me. Our Hall of Fame's been pretty good, and my accounts are doing really well this year. I don't really want to give you much more of a sell beyond that, because I want to help you whether you want to decide to support me or not. So thank you very much. I'll see you on the next one.